네, 여러분 안녕하십니까? 저는
Distinguished
오늘
guests, good
2021
morning.
글로벌 경제 투자
My name
포럼의
is
진행을
Chu
맡은
Hae-jung,
아나운서
MC of the Global
최혜정입니다.
Economy
반갑습니다.
Investment Forum 2021. Welcome to the
네,
forum.
올해로 6회째를 맞는
The
이번
forum, which
포럼은
marks its
코로나19의
sixth
영향으로
anniversary this
작년에
year,
이어
is held
올해도
online for 2
온라인으로
consecutive
진행됩니다.
years due to
내년에는 부디
COVID-19.
현장에서
I
뵐 수
hope that
있기를
we
바라겠습니다.
soon meet in person.
2021 글로벌
The Global
경제 투자
Economy
포럼은
Investment Forum
조선비즈
2021 is
사이트와 유튜브를
broadcast
통해
live on
생중계됩니다.
Chosunbiz website and
조선비즈 유튜브
YouTube.
채널을
Please
구독하시면
subscribe to
앞으로도
Chosunbiz YouTube
조선비즈에서
channel
하는
to
온라인
receive
행사들을
notifications
확인하실
of
수
the online
있습니다.
events held by
그럼 먼저
Chosunbiz.
행사 전 잠시 안내
Let me make
말씀드립니다.
just a few
본
housekeeping notes before
행사는
we get started.
영문으로도 제공됩니다.
Simultaneous interpretation is
영어
provided
원문을 듣고
throughout the
싶은
forum.
분들은 영문
Please watch the
채널에서
forum on
시청을
the English
부탁드립니다.
channel if you wish to
아울러
listen to
본 포럼의
English.
영상의 저작권은
Chosunbiz
조선비즈에
owns the
있으며
copyright
본
of this
포럼
forum
영상의
video.
2차 가공 및
Processing
배포는
and
금지되어
distribution of this
있습니다.
forum video is
참고로
prohibited.
네트워크 환경에 따라
You may
끊김이
experience
발생할 수
stream
있으며
disconnects
사용자 환경에
depending on
따라
the
화질 및
network setup,
음질이 다소
and we
안 좋을
ask
수
for your
있다는 점
forgiveness for any
양해해
inconvenience you
드리겠습니다.
may experience due to
네,
poor
오늘
video
행사가
and
진행되는
audio
동안
quality.
라이브 인증 이벤트를 진행하고
You can
있습니다.
also
시청하고
enter
계신 화면을
the photo event
촬영하고
we are hosting
사진을
with a chance
DM으로
to win gift
보내주시면
coupons.
추첨을 통해
DM us a
당첨을
photo of
보내드립니다.
yourself watching the
많은
forum,
참여
and you will
부탁드립니다.
be eligible to
자세한
win
참여
a
방법은
prize.
시청하고
See the
계신
event
영상의
details
본문을 통해
on the
확인이
YouTube
가능합니다.
channel or Chosunbiz channel.
네, 그럼 시작에 앞서 축사 영상
Now,
함께
before we
보도록 할
kickstart
텐데요.
the
특별히
forum,
이번 포럼을 위해
Governor Kyung-Min of the Financial
금융감독원장님께서
Supervisory
축사를
Service sent us a
보내주셨습니다.
video message
지금
to
들어보겠습니다.
congratulate the opening of the forum. Let us watch the video.
안녕하십니까?
Good morning.
금융감독원장
My name is
정은보입니다.
Chulmin, Governor of the Financial Supervisory Service,
글로벌
FSS.
경제 투자 포럼에
Congratulations on the opening of the
축하드리며
Global Economy Investment Forum
뜻깊은 자리를
2021.
마련해 주신
Thank you, CEO
조선비즈
Kim-Young-soo of
명수
Chosunbiz,
대표님께
for
감사의
arranging this
말씀을 드립니다.
very meaningful event.
이어지는 강연과 토론에
My special thanks also go to the experts in various fields who will offer insight with their presentations and discussions. Although demand is picking up with the supply of vaccines and hopes for the With Corona scheme, supply bottlenecks have dampened the economic outlook, contributing to slow growth and prolonged inflation.
또한 각국의
In addition, uncertainties over contractionary monetary policies across countries remain, and China's real estate companies are still highly distressed. As for the Korean economy, major risk factors include low interest rates, soaring private debt triggered by quantitative easing policies, and asset price inflation. Combinations of domestic and foreign risk factors risk causing an economic shock and upending the financial market overnight. Recently, the biggest change in the domestic capital market has been the significant rise of retail investors turning to direct investments due to increased volatility and abundant liquidity. I thus ask the financial investment industry to take the lead in establishing a sound investment culture by providing a variety of indirect investment products and customized services in response to these changes. Distinguished guests, there is a Korean saying that goes, "The wise rabbit digs 3 holes," meaning that wise people prepare ahead of time for an unexpected turn of events. The lesson here is that economic uncertainties of today require more thorough preparation. FSS will closely monitor domestic and foreign investor trends caused by the increased volatility and set a framework in place to respond promptly to unnecessary market volatility. FSS will carefully examine any instability relating to investor protection and financial market caused by the recent rise in stock purchase through direct investment. Lastly, FSS will spare no effort to create a fair investment environment by taking strict measures against illegal quasi-investment advisory services and unfair trade. I would like to end my speech by saying that I truly hope today's forum serves as a milestone in paving the way for a healthy investment culture. Thank you. Yes, thank you very much, Governor Chung Eun-bo, for your remark. He talked about the Korean saying that goes the wise rabbit digs 3 holes. Thank you very much for that kind message and lesson. COVID has brought significant changes to our economy, which raises not only concerns but also hope for the future. It is in this line that the theme of this year's forum is Crisis Can Be Turned into Opportunity in the Age of COVID Economics. What can we expect in this age of COVID economics? Let us find out at the Global Economy Investment Forum 2021.
That was the opening video of this forum, and let us kick off the main program. We have with us the keynote presenter, who is Professor Mauro Guillén of UPenn, and he's the author of the global bestseller 2030, How Today's Biggest Trends Will Collide and Reshape the Future of Everything. He's going to be discussing new opportunities in the COVID era with these trends colliding and reshaping. Please welcome Professor Guillén.
Good morning, everyone. It's an honor for me to be here in Seoul addressing this Global Economy Investment Forum 2021 at the intersection of the coronavirus and the economy. Today, I would like to tell you over the next 30 minutes or so about the new post-COVID world of investing. What are the most important trends that I think investors should keep in mind for the next 5 to 10 years when it comes to thinking about investment opportunities in the world? So I would like to tell you about 3 kinds of trends that I think are going to become really, really important over the next 10 years because they're going to be reaching critical levels, because they're going to be changing the landscape in the economy and therefore in the world of investing. The 3 trends are population trends, the second one is economic trends, and the third, technological trends. I will also, towards the end, tell you a little bit about how these 3 types of trends will change geopolitics, and in particular, the world of currencies, which is also a really, really important aspect of investing in the next few years. As I present the different trends, I would like to encourage you to think not only about each individual trend, but to try to look for how those trends individually are connected to other trends. You need to see how the different trends, population, economic, technological, come together. And if you connect the dots, then you are going to be able to see the unanticipated effects, the consequences of some of these changes and transformations. And you will be able to identify the most important opportunities for investing in the next few years. So first, let me tell you about population trends. So I call this section Following the Babies. Why is it so important to follow the babies? It's really important to follow the babies for 2 reasons. Number 1 is that the babies that were born in the last 10 or 15 years, the babies that will be born in the next few years, are the young consumers of the future. And of course, the economy, we all know, is in the more developed parts of the world, but also in China also in some emerging markets, driven by consumption. That has become the single most important component of gross domestic product, of GDP, over the last few decades. Now, the second very important reason why we also need to follow the babies is because the babies who were born in the last few years, the babies that will be born in the next few years, will be the workers of tomorrow. And so different parts of the world will have different numbers of babies. And that's going to have a very immediate, very direct impact on the economy, on both the consumption side and the labor market side. And look, what's going on with the number of babies in the world is very simple. Broadly speaking, it has been dropping, this number. What you see on the screen is the total fertility rate. So this is the number of children born per woman, estimated over her reproductive lifetime. The chart begins on the left in the year 1950, and it goes to the end of 2020, to the end of last year with actual data, and then the rest are projections into the future. Now, I don't want today you to think about what's going to happen between now and the year 2100. I just want you to focus on the next few years, to the year 2030. Vertically, once again, on this chart, we're measuring the number of babies per woman, estimated over her reproductive lifetime. As you can see, the total for the world, the thickest line, starts at a level of 5 in 1950, but today we're already at a level of about 2.3, 2.4 in the world. And the forecast is that it will continue to go down in the next few years. Now, that total aggregate number for the world is distributed in very different ways, depending on different regions. At the top, you have the poorest parts of the world. Is the dotted line that starts at a level of nearly 7 babies in 1950. That dotted line increases slightly until more or less 1980 or 1985. But even in these poorer parts of the world, the number of babies is dropping. But don't get me wrong. As we speak today, in the year 2021, in those parts of the world, we still see that women, on average, are having 4 or 4.1 babies. Which are those parts of the world? Well, it's mostly sub-Saharan Africa, parts of the Middle East, and parts of South Asia. What's really important to keep in mind here is that in these poorer parts of the world, the number of babies is dropping primarily because women are having better access to education, better access to opportunities in the job market. And that was also the original reason why the number of babies started to drop so dramatically in the more developed parts of the world, in the United States, in Europe, in Canada, in Australia, and so on. And that started to happen, if you remember, already in the 1960s. So we see that the first and most important reason for this decline in the number of babies is actually the same in those two parts of the world, the richest and the poorest. But there is a substantial time lag. Now, the thin line that starts at a level of 6 in the year 1950 is for the less developed parts of the world. These are the emerging markets: China, India, Indonesia, Thailand, Turkey, Brazil, Mexico. So this line also, you can see that since the year approximately 1975 or 1980, the number of babies has also been dropping. So what's the situation as of today? The situation as of today is that in the poorest parts of the world, the number of babies is above 4 per woman, whereas in more developed parts of the world, the line that you see at the bottom of the screen, the number of babies is below 2. Well, the implication is very clear. We should be expecting that the poorest parts of the world are going to have bigger populations in the future. But there's also a surprising fact on this chart that I want to bring to your attention. If you examine very carefully the line at the bottom, you will observe that beginning in the year 2000, the number of babies in the richest parts of the world, the more developed parts of the world, no longer goes down, but rather starts to grow very, very slightly, very, very slowly, and has been doing so for the last 20 years. And in fact, the forecast is that it will continue to go up for the next 20 or 25 years from today. Now, the main reason for that slight increase is immigration. Larger numbers of immigrants in some European countries and also in the United States has created this effect for a very simple reason, which is that immigrant families tend to have more babies. So the first thing that I want you to remember is that we have this very, very different level of fertility in the poorer parts of the world and in the more developed parts of the world, with the emerging markets very quickly approximating the more developed parts of the world. Now, one very important aspect of this decline has to do with China. China is an important country for two reasons, of course. One is that it's a very big country in terms of population. And secondly, is that it is an economy that has been playing over the last 20 or 30 years a very important role, not just in terms of exports of manufactured goods, but also in terms of the exports of savings, meaning that Chinese surpluses have helped fund the deficits in other parts of the world, most notably in the United States. Now, in China, when it comes to population, we all remember the one-child policy, which is now history. 4 or 5 years ago, the government relaxed it to become a two-child policy. And in the month of May of this year, just a few months ago, the Chinese government further relaxed that policy, and now they have a 3-child policy. Now, as you can see, the one-child policy was introduced in the year 1979. Now, the fertility rate in China had already declined during the 1950s, 60s, and 70s, both in the rural areas, which you see at the top of the chart, and also in the urban areas of China, which you see at the bottom of the chart. That was because people were moving from the small village to the city. That was because women in China were having better access to education, better access to job opportunities. So the number of children in China is projected to continue falling. China, once again, as I said, is key because of its size, because of the dramatic and very fast decline in fertility. That, in turn, will impact the national savings rate. When the population gets older, the national savings rate in any country in the world will tend to go down, because people, instead of working and saving for retirement, they're already in retirement. And therefore, then, they're using their savings to pay for their expenses, as opposed to accumulating more savings. So I think that this demographic decline will have very important implications in China, but it will have also really important effects throughout the world, throughout the global financial markets, because it will have an impact on international financial flows eventually. And the key question here is, what's going to happen in China with the removal of the one-child policy? Well, consider these fertility rates as of a year and a half ago. So this was already a year and a half ago, before the pandemic. In China, 1.7 babies per woman. In Taiwan, 1.2. In South Korea, at the time, 1.1. In South Korea, as you know, as of this year, is 0.9 or slightly below 0.9. And in China, it's already also dropping. If this number of babies has dropped so much in South Korea, also in Taiwan, and in other countries around the world, I have no reason to believe that it will not go down in China as two things happen. The economy develops, more people continue to move from the small village to a city environment, and then secondly, opportunities for women to educate themselves and to have jobs in the labor market continue to improve. So my forecast is that in China, in spite of all of the efforts by the government to try to reverse the decline in the fertility rate, it's going to be very, very difficult to accomplish a reversal because the economic conditions are conducive to that decline. Now, one side of the coin, of course, whenever we talk about population, is the number of babies. But the other side of the coin is about life expectancy. How long are those babies assumed to live? We call that life expectancy at birth. So in this chart, we once again begin in the year 1950. On the left, we go halfway through the chart to the end of 2020 with actual data, and then the rest are forecasts into the future. Vertically, we're measuring for a baby born in a particular year, how long that baby is expected to live in years depending on whether that baby was born in the more developed parts of the world, which is the curve at the top, or the dotted line at the bottom, a baby born in one of the poorest parts of the world, the least developed parts of the world. As you can see, there's very good news on this chart. I cannot make any promises to anybody listening, but on average, we will live maybe 5 or 6 years longer than our parents, and perhaps as many as 11 years longer than our grandparents. But there's another very important thing on this chart that I want you to keep in mind, which is that there is convergence. The poorer countries are seeing the life expectancy of their babies grow over time faster than the life expectancy of the babies in the richer parts of the world is growing. And hence, that's why you see this convergence over time. So in other words, the poorer countries are catching up. So if we put together these two numbers, the number of babies and the number of years that those babies will have in terms of life expectancy, then we can calculate the size of populations in different parts of the world. And this, I think, is what you see on the chart, one of the most important messages that I want to send today to the investing community. Because these population shifts around the world create very different opportunities for growth and for investing in the near future. So once again, on this chart, we begin in the year 1950, we go to 2020 with actual data, and the rest are forecasts. I want you to focus your attention on the year 2028. Because of the pandemic, it's no longer the year 2030. I drew a vertical line in the year 2028. And as you can see, several of the curves cross each other in the year 2028. So vertically, what we're measuring is what percentage of the world's population is in different regions or countries around the world. Well, by the year 2028, you can see that South Central Asia, which includes India, Pakistan, Bangladesh, Sri Lanka, will have reached a maximum. Also in the year 2028, Africa will become for the first time bigger in terms of population than all of East Asia. And let's not forget, East Asia includes very large countries by population, like China, but also Japan, South Korea, and so on. Also in the year 2028, the part of the world where I come from, Europe, will become the 5th or the 6th largest by population. And look, back in 1950, Europe was the 2nd biggest region in the world by population. So by the year 2028, the situation is going to be very, very different in terms of the demographic weight of each of these different parts of the world. Now, I haven't told you anything about how rich each of these babies is going to be in different parts of the world. We're going to examine that next. But as you can see, the world is going to look very, very different. And I think the investing opportunities will shift accordingly. Now, think about Africa. With that population growth, of course, things could go wrong in Africa. But I'm optimistic about that continent. I think there's going to be a big infrastructure and consumer boom in Africa. No doubt there are risks, both geopolitical and economic risks, on the business side and also on the currency side. But look, Africa is a very large place. It's a continent with more than 50 independent countries. But if you want to capture most economic activity, all you need to think about is 6 to 8 big cities or metropolitan areas. So at the very least, I would encourage you to observe what's going on in Africa and maybe act later with your own investing. But think that Africa, unless something goes awfully wrong, and I do recognize some of the risks, is going to become a very dynamic part of the global economy. Now, this is not everything that is going to change from a population point of view. Also, different age segments are going to have different rates of growth, depending on the part of the world, as a result of the decline in the number of babies, which, if you remember, is happening at different rates or speeds in different parts of the world. So let's focus for a moment in the age group between 15 and 35 years of age. These are the young consumers of tomorrow. In the table, what you have is how many millions of people between the ages of 15 and 35, the largest countries in the world, had at the end of 2020, and how many they are projected to have by the year 2030. And if you observe the table carefully, there's essentially three types of countries. First, we have countries in which the number of people between the ages of 15 and 35 is going to grow. India, Nigeria. Then we have other countries in which there's going to be a decline, like in China, in Japan, in Brazil, or also in South Korea, which doesn't appear on the table because it's not among the biggest countries in the world in terms of this age group. But here in South Korea, the number of people between the ages of 15 and 35 is going to decline from 12.5 million as of the end of last year, down to 10.3 million by the year 2030. And then lastly, there's a third category of countries, countries in which the number of young people is not going to change significantly between now and the year 2030. I think the United States is the best example of that. As you can see in the table, it's barely going to change, 90 million, 89 million. Now, that doesn't mean that nothing is going to change with this younger age group, because the composition, the diversity of this group of young people in the United States is changing very quickly. Let's not forget that minority groups, that is African Americans, Latins, Asian Americans, and so on, they tend to have more children. Plus, there is the effect of immigration. So therefore, what happens is that by the year 2030, the US government predicts that what today we call minority groups will become the majority in the United States by the year 2030. And that will have a very important impact on markets because members of these groups tend to marry at an earlier age. And adjusting for their income level, they're more likely to purchase a home and to purchase a car. So a lot of things are going to change in the American economy just because of the shift in the composition of this younger age group. Once again, because they behave differently. They make different decisions. But by far, the biggest population trend is the population above age 60. Here you have a similar table. How many millions of people are there in different parts of the world between the ages, above the age of 60? And we have this for the end of 2020, last year, and we also have the projection for the year 2030. And in this case, there's only one type of country. It doesn't matter where you look, whether you're considering a rich country or a poor country. In every country in the world, there's going to be more people above the age of 60. Look at China, 160 million more people above the age of 60. But don't forget, people above the age of 60 are no longer the same or behave in the same way economically as people in that demographic 20 or 30 years ago. They're increasingly more active. They're increasingly savvy from a technological point of view. And I believe they're going to be the ones who will take the most advantage from the gig economy, from working through platforms. Because remote gig work is extremely flexible. It enables people above the age of 60, 70, or 80 to be socially connected. And it helps them supplement their retirement savings. So let's talk more about money now. Let's follow the money. You know very well here in East Asia that the center of gravity of consumption in the world is shifting. This is what you see on this chart, which goes to the year 2030. By the year 2030, the combined purchasing power of the middle class in China, India, and the rest of Asia, even excluding Japan, will be more than 50% of the total in the world. But I want to bring to your attention something even more important in this second chart. Now the analysis continues to the year 2050 on the right. And if you notice, by the year 2040 or so, I am projecting that China will no longer be the largest consumer market in the world, that India will become bigger. A lot of people frown. They feel this is not right. There must be something wrong with the calculations. But I want to remind you about two very important demographic trends here. India is having more babies than China. Therefore, India will have a younger population. And the big differences in consumption always have to do with durable goods, such as homes, automobiles, and appliances for the home. And for each of those categories, there will be more purchases in India than in China because of the younger characteristic of its population. So China, don't get me wrong, will have the biggest economy because the economy is not just domestic consumption, it's also exports and investment. But India will have the largest consumer market in the world, I think beginning in the year 2040 or so. Now, at the same time that we see this expansion of the middle class, we also see an expansion in the number of wealthy people in the world. And of course, their wealth will need to be invested. And I also wanted to bring this to your attention because I think it's really important in an investors forum to keep track of this. Here what you see is data on the so-called high net worth individuals. People who have at least a net worth of $1 million, adjusted for inflation. We have the numbers here between 2007 and the end of 2020, the end of last year. And as you can see, since the last global financial crisis in 2008, the number of high net worth individuals in the world has more than doubled to nearly 20 million people in the world. In every region, you can also see on the chart, there has been an increase. Now, if we take a look at how much wealth in dollars these high net worth individuals possess, we also see that it has more than doubled since the year 2008. And we are approaching 80 trillions, American trillions, that would be billions in other parts of the world. So what we have here is essentially a process of wealth accumulation happening everywhere in the world that is also going to change the world of investing and is creating a massive growth among wealth managers in the world. You can see over here that South Korea is one of the top 12 countries in the world in terms of the numbers of these high net worth individuals, with about 260,000 of them as of the end of 2020. Now, I know that income inequality and wealth inequality is a topic that is widely discussed in South Korea these days. That's, of course, the other side of the coin here. One side of the coin is the accumulation of wealth and the kinds of investment opportunities that that creates. The other is how it contributes to this very important problem, not just here, but also in Europe and the United States, with wealth inequality. But there's another thing that I want to bring to your attention. Most of this wealth is being concentrated in the upper age groups, except for in China, which is the third bar from the right. In most of the world, the wealth is accumulated in the hands of people above the age of 50. So much so that, for example, in the United States, 80% of the net worth is owned by people above the age of 60. And in most other countries in the world, including South Korea, it's about 60%. Let me repeat that. 60% of the wealth, of the net worth, owned by people above the age of 60. That doesn't mean that everybody above that age is rich, because once again, we have this process of wealth inequality. But what it means is that that segment of the market has purchasing power. And even more importantly, women. As of the end of last year, we had in the world, for the first time, more women who were high net worth individuals than men. Why? For two reasons. One is that now women have better access to education, better access to jobs. They're making their own money. They are saving that money and investing it well. The second reason is that women live, on average, 6 years longer than men in many countries around the world. And what that means, essentially, is that they have more time to work, more time to invest, and they also have a better chance, a higher probability of inheriting than the other way around. So this is going to have an impact on consumption. It's going to have an impact on savings, but also in investment behavior. Let's not forget that the data very clearly demonstrate, and also experiments that researchers have conducted, that women tend to be more risk-averse as investors. As we have more money in the world, more wealth in the hands of women, we should be expecting that the mix of investors will change towards more risk aversion. Having said that, let's not forget that both men and women change their investing behavior and their attitudes towards risk as they acquire more experience. And women in particular, they tend to become less risk averse as they acquire more experience in managing their own money. In the last 4 minutes of my presentation, I'd like to bring to your attention one last, I think, very important issue that has to do with money and also with technology. Look, the world has changed dramatically when it comes to currencies since 100 years ago. Here you have a map of the world and capital flows in 1914, just before World War I. The UK pound sterling were dominant in that kind of world. Fast forward to the year 1967. That's when the dollar was at its peak in influence in the world. Europe was still recovering from World War II. So was Japan. China wasn't even part of the picture in the year 1967. By the year 2000, now we have Europe fully recovered and actually altogether more important financially than the United States, although the dollar continues to be, of course, the dominant currency in the world. And now we see Japan and China emerging. And the last year for which I have complete data, which is 2 years ago, we see 4 very important nodes in this global network of capital investments: Europe, the United States, China, and Japan, with India and Saudi Arabia emerging. So what's going on is something very simple. Most of us were born in the post-World War II world, when the US was the largest economy, was the largest trading nation, had the largest navy, and the dollar was the dominant reserve currency. And let's not forget, until the year 1971, the dollar was on the gold standard. But things have changed since then. And as of today, China is close to becoming the largest economy. It will happen in the next few years. China already is the largest trading nation. Yes, it's true the United States still provides for security with the largest navy, but there's a big question mark as to whether that will continue to be the case long into the future. And lastly, yes, the US dollar continues to be the dominant reserve currency, followed by the euro. But if we take a look at central banks and their allocated reserves, it's very clear that over the last 20 years, as you can see on this chart, the dollar has been declining as a percentage of all of the allocated reserves by central banks in the world. The problem, of course, is that the currency of that country that is becoming a very important player in the global economy already is the largest trading nation and is about to become the largest economy. That's China. Their currency, the renminbi, is not to be trusted because there's no free movements of capital, because the legal institutions for protecting investors are not fully developed in China, because there's no freedom of capital movement, and also there's no convertibility of this currency. So the dollar may not be in its best shape because of the deficits in the United States, but it has no match in the Chinese renminbi. But I want to leave you with this chart in the last minutes, just to show you how quickly things have been changing. Here what you see is something very simple. Between 2001 and just a few weeks ago, so for the last 20 years, the evolution of the exchange rates for several Asian currencies relative to the US dollar. Everything here is relative to the US dollar. So the flat line on the chart at a level of 1 is the Hong Kong dollar. The red line is the Chinese renminbi. And then you have the currencies for Australia, for South Korea, for Malaysia, for the Philippines, for India, Indonesia, Singapore, and Thailand. And something very clear happened, of course, in 2008. All of the currency exchange rates went crazy because of the global financial crisis. But look at what happened thereafter. These currencies in Asia are no longer following the dollar. They're not tracking the dollar. They're going up and down. And the pattern of going up and down depends on the renminbi. When the renminbi appreciates relative to the US dollar, the Korean won, the Thai baht, and so on and so forth, they tend to appreciate. That is what's going on. The world that we were in has ended. It has ended from a population point of view. It is ending from an economic point of view in terms of the middle class and its purchasing power. It's also ending in terms of the currency situation. So thank you again for your attention. Thank you for inviting me. I hope that my comments and my remarks are useful as you try to understand what are the big opportunities and what are the big transformations that are going to be taking place in the world of investing over the next few years. Thank you very much.
Thank you very much, Professor, for the keynote speech. You talked about the prospects for future investment by demographics, by gender, and by currency. Thank you very much for that thorough analysis. Thank you for the keynote speech. Now moving on to the next presentation. The next presentation will be the first presentation, and it will be delivered by Mr. John Lee, CEO and CIO of Meritz Asset Management, who will present about businesses worth investing amidst COVID-19. Mr. Lee is a well-known and respected speaker and mentor in investment.
번째 강연
Mr. Lee, you can now take the floor.
네, 안녕하세요, 여러분. 반갑습니다.
Good morning, everyone. It's nice to see you all.
주식 투자를 시작하면서요.
And many people have started investing in stocks, and they have thus started to ask me many questions about where to invest. And today's topic is where to invest amidst COVID-19. And I believe that this topic is very timely. But let's set COVID-19 aside and simply think about businesses worth investing. So let us look at that topic first and then move on to the changes brought about by COVID-19 and what elements we need to consider when making investments. So let us connect the dots between the two. So I'll talk about those two topics today. First, many people ask me questions about businesses worth investing. And it's hard to know where to invest given that there are thousands and 2,000 companies. And people want to find out more about businesses worth investing, but it's a tough job. And many Koreans, when investing in stock,
스크린이라고 합니다.
they first screen the list of the businesses that they have.
저희와 저희 펀드 매니저가
And what we do
과정을
in our company and our fund managers, we have our own protocol and process of filtering and screening businesses. So I would like to talk about that. So first, when we look at businesses, we will look at, first off, will this company thrive, continue to sustain and thrive in this market? Number two,
이 회사를 살려고 하는데
so I want to buy stock of this company. What is the price of this company? Is it expensive? Is it cheap?
그 과정이
So we have to look at those two aspects. And of course,
앞으로 계속 잘 될 것인가?
it's common sense. Of course, the businesses have to survive and thrive. And number two,
가격이 리저너블한가?
the stock price must be reasonable for the retail investors to buy. Then let us look at the first point first.
이 기업이 잘 될 것인가 안 될
Will this company survive and thrive going forward? Then when we look at the company, what should be our criteria?
택할 때 가장 중요한
When we decide to buy stocks, what do we need to look at?
때는
We have to look at the qualifications and the qualities of the management level.
그리고 특히 저희는 주식을
In particular,
투자할 때는
when we buy stocks,
기간을 보고 투자하죠.
we look at it from 5 to 10 years in the long term.
적어도 5년 정도는 소유해야 된다는
That means that
삽니다.
our precondition is that we will keep this stock for at least 5 years.
중요한 거는
Then, what matters here is that the quality
퀄리티라고 합니다.
of the management
경영진의
is
자질을
key.
볼까요?
In English, it's management quality. Then, what qualities am I referring to? That includes transparency,
얼마나 능력 있느냐.
the
그리고
skills
이 회사를
of the
운영하는 그
C-level
거버넌스
people,
그다음에
the governance, the leadership of the management.
회사가 우리 투자가
So we have to look at all those elements to make the decision
되는 경우도 있죠.
for investment for at least 5 to 20 years. So is this business worth investing?
자질을 보고 투자하는
And number one, you have to look at the quality of the management, the qualities of the management.
몇십 년을 하다 보니까 이
I have been in this business for over 2-3 decades.
미래를
So that taught me that what determines the future of the company is the qualities of the management. Number two, we have to look at stock price. Is it too expensive? Is it affordable?
단순히 그 회사가 오랫동안
And
벌었는지 안 벌었는지 중요한 게 아니고
so it's not just about the profit that this company has been making to date,
벌었는지
It's how they generated profit, and will this trend continue going forward? Because that is the toughest challenge. Now, the stock price may be low. However, in 5 years' time, that may fluctuate. Sometimes it goes down, sometimes it goes up. And that's the most challenging part when making decisions. So investing in stocks appear to be simple and easy. However, when you look behind the investment, it has many intertwined complexity. So first off, we have to look at the qualities of the management. Then people ask me this question: how do we assess the qualities of the management? The global trend is to look at what they're doing, for instance, on the web. And many times the CEOs present in front of the investors. So unlike the past, it's much easier to find out the qualities of the management. For instance, we want to invest in Tesla, then the management of Tesla, through the investment conferences as well as shareholder meetings and so forth, they will present about their own companies, and we have to make judgment accordingly. Then what stock to invest to? Well, it depends on the company, and the different asset management companies manage different companies. And the first approach is a top-down approach. What I mean by that is that the world is changing rapidly, and now companies that thrived in the past suddenly go down. On the other hand, there are some companies that seemed so minuscule that just grow suddenly, which includes Amazon as well as some companies in the US, and their market value grows exponentially overnight. But on the other hand, as I said, some companies will go bankrupt and they will lose competitiveness. So as an investor, we have to make the decision by assessing the two. It can be bio or platform companies which are worth investing. So instead of looking at the company itself, we have to look at the industry as a whole and the theme of the company. And that is the top-down approach. We must not be obsessed with individual companies, but the category, the theme of the industry. On the other hand, there is this bottom-up approach. Instead of looking at the industry, we look at the individual company. And by analyzing individual companies thoroughly, that can work also. What we do, we usually prefer bottom-up over top-down approach. So we want to buy stocks of companies that we want to have, we want to own, which led us to invest in platform, bio, and healthcare businesses. So we have a very fair distribution of portfolio of these companies. So I guess it's really up to the preference of the asset management company, but the bottom line here is to look at the value of the company. And many people, when they make decisions, when choosing the companies or investing in certain stocks, they just have a hype of expectations. They just look at the price also. Let's say that you buy this stock at 100,000 Korean won, you expect that to increase by 5-fold or so forth. And if the stock goes up by 20%, then you will make profit. Otherwise, you will make deficit. But here, I do not think that is the right approach. I think it's wrong to invest like that. You should not invest in the money, in the value of the present day. That's quite risky, but that's what's happening in Korea.
저지를 수 있는
It's a common mistake of many retail investors,
주식을 사고 팔게 되고
which is why people keep selling and buying stocks, making mistakes, and they end up giving up
주식 투자가 어려울까?
and say that
남들은
stock investment is so tough. Other people are making money, but I'm not, and
하게 됩니다.
this is so tough. However, that's because they made wrong judgment. So I wanted to tell you, aside of COVID-19,
개인 간의
where to invest. Of course, individual preferences may differ because you have different preferences over companies in terms of likes and don't likes. However,
반대를 합니다.
this is key. For instance, even within a same company, I want to invest in company A, but other asset managers want to invest in
투자하는 사람들이
company B, so we differ as well. However, we have to look at what's the essence here. So some people say we should buy this, some people say we shouldn't. Why is this happening? Well, that's actually healthy in terms of investment culture. There is no set rule.
그 회사의 미래에 대해서
However, what is certain is that we all differ in our perceptions of
펀드 매니저는
a specific company, and fund managers will collect the judgment of the analyst and make the final decision.
해당되지 않아요.
So I do not think that democracy works in investment
투자라는 건
because
펀드
investment
앞으로 돈을 벌 거냐.
is investing in the fundamentals of the company, whether this company will generate profit in the future or not.
게임이 아니고
It's not about guessing the right stock price.
갖고 싶으냐
It's
안 갖고 싶으냐.
about whether you want to own the company or not for the next 5 or 10 years.
싶으냐가
So that should
그 판단 기준이
determine your decision
말씀드립니다.
when making
그래서 이제
investment
코로나가 됐을 때
in stocks.
우리가 투자하는
Then let us look at this in the context of COVID-19.
그에 대해서 제가
Let us look at what changes COVID-19 brought.
결국 그겁니다. 코로나 때문에 생기는 변화가 뭘까?
What are the changes that the pandemic brought about? Of course, there are many changes
일단
that the pandemic brought. First,
회사를 운영하는
we cannot travel because of the mobility restrictions. And number two, because of COVID, people had to work from home. Then what happened?
그럼 우리 회사로만 끝나는 게 아니라
What was the outcome of that? And that doesn't end with our company only. It has ripple effects on the region and on other countries as well. Then which company will perform well
또 한 가지 이거는
under these
어떤
circumstances?
투자의 그런 주제하고는 조금 벗어나겠지만
And I think I'm deviating a little bit here, but let's say in the US, who performed well amid the pandemic? Those who had stock asset. And the wealth disparity grew even further with those who had stock and those who didn't have stock. COVID-19 brought much pain.
돈이 중요하구나.
Then what did we feel from the pandemic? That we need money.
더 부자가 됐는데
And those with stock became wealthier, those without stock
의지했던 사람들은
and who relied on labor only for income got fired, which led to income disparity between the two.
기업을 고를 때
Then, when we decide on where to invest, how will these circumstances affect our decision?
기업을 운영할
In the past, when we ran a company,
장을 가야 됐습니다.
everybody had to go on a business trips. I traveled so much
못 하게 됐는데
in the past. Now we can't do that.
더잘 되게 됐어요.
But the company is performing even better
훨씬 더 효과적인
than pre-COVID. Why? Because it has become much more effective. We have Zoom meetings, so we were able to cut down on costs,
시간을 낭비하는
and we were able to reduce inefficient time management.
또 더 중요한 거는 많은 출장비를 세이브.
So we were able to save
그러면 여기서
the business travel expenses
기업들의 이익이
as well as other expenses as well.
실제로
Then that will lead to greater profit. In the US, they talk a lot about inflation and tapering and so on. What about the stock price?
다시 또 레코드 하이가 됐죠.
Still
S&P 500
on a record high for S&P 500, it's hitting record high again,
많이 번 거예요.
which means that companies made more profit than before.
세상 사람들이 걱정한 거에 비해서
Now, people were concerned over the inflation and so on. However, that didn't turn out to be the case. So,
투자가 훨씬 더
investing in stocks
깨닫게 됐고요. 근데 우리
has increased in terms of its importance compared to the past. So what I would like to say here is that we need to invest in businesses that are scalable in terms of time and space, and that has become a key criteria. What I mean by that is that companies can no longer be satisfied with producing good products. That's the outdated business model, and those companies will no longer survive going forward. They need to transcend the time and space
어느 나라에서
to survive and thrive.
공장이 있고
Now we
시대였다고 그러면
thought a lot about where this company is located in, where it invests in, but now with the power of the internet, we can transcend time and geography. With the advances of technology, people can now easily find out about the products, about the people of the company. So the management
지역하고 상관없이
needs to become smarter,
훨씬 더 중요한
and the qualities of the management matter so much more than in the past.
아시죠?
I'm sure that you all know Netflix.
굉장히 큰 단순히 넷플릭스 하나의 의미가 아니라
And Netflix is so much more than just a brand name. It offers great content and diversified its content, which actually helped the company transcend geography. And what drove that was technology. And the power of technology enables so much more.
굉장히 많이 생길 거라고 생각합니다.
And this trend will continue going forward. And the stock price of Netflix rose tremendously because of this inclusivity and diversity. It's not located in one single spot. It is scalable. And that can bring so much benefits. And its revenue soared. So we have to invest in those companies. Next, we need to invest in companies with the power of a strong brand because that relates to trust. A primary example would be Nike with
메시지가 있어요.
a huge
나이키라는 회사가 갖고 있는
company value, market value. And Nike
메시지를 전해주죠.
sends a clear message, unlike other companies. And that shows the power of its strong brand.
운동화를 만드는 회사가 아니라
So it's not just about a company that makes running shoes.
중요한 사회적 이슈를 다룸으로 인해서
It deals with social agenda, global social agenda, and provides digital and branding campaigns that create added value for the company. So as people who invest in the long term, we need to invest in these companies with strong brand values.
그러니까 이런 브랜드가 많죠.
And there are so many brands like that.
탑 10
These are the top 10 most valuable apparel brands.
어떤 옷에 단순히 그 옷을 잘 만든다.
As I said, it's not simply about whether this company makes good clothing or not. It's about the social values that they aspire to and that they uphold. And that will translate into brand values of the company. And Nike was ranked top most valuable apparel brand for many consecutive years. It still remains as the #1 brand. And it was able to sustain its market share because it was able to maintain retail prices despite cost increase. Next, as you know, market dominance. So the commodity price may soar, But companies should be able to flexibly deal with this. Primary examples would be TSMC as well as Samsung Electronics, which is why you need to invest in companies that can easily increase their selling price due to exceptional market positioning. Next, companies need to be flexible.
특히 ESG라고 하잖아요.
ESG is such a hot agenda these days.
ESG가 종교적인 이슈였습니다.
And ESG was like a religion in the past.
사업에 도움이 되는 사회에 도움이 되는
And we said that if possible, you should invest in companies that invest in social cause. However, now ESG is a must. It's not an option. Companies must uphold ESG to survive because otherwise people will not invest in those companies. And all companies are now pursuing ESG values. So, be it mutual funds or other funds, 60 to 70% of the mutual funds will pursue ESG. And the same goes for the consumers. They are very aware of the environment, of health, and social responsibility. Because otherwise, consumers will not buy products from non-ESG companies, and they will not invest in their stocks. In particular, when it comes to Korea, diversity matters. Before, we did not really care about, for instance, female representation or diversity. But of course, in the US, they also talk about race, not only about female representation. When all board members are white, then their stock price will not go up because or investors will not have trust in those companies because they lack diversity. And the same goes for Korea as well. Especially female representation, because gender issue is a mainstream topic these days. So how many female people they have in the organization matters. Female representation in the C-level positions will matter. But it is a shame that Korean companies still have low female representation. But you have to invest in companies with higher female representation, because otherwise it will mean that the company is quite rigid in terms of diversity, and the stock price will be affected by this fact, I believe, going forward. In the US, the ROE of companies with female CEOs are much higher than the companies that do not have female CEOs. So I believe that the same will go for Korea going forward. So the top priority would be looking at the qualities of the management and the culture of the company. That's number one priority, because those companies will undoubtedly see increased stock price in the future. And I believe that that can really impact decision-making. Rigid companies will not be able to flexibly adapt to changes or crises, but the more diversity you have in your company, the more you will be likely to adapt to changes. For instance, this is the case of Estée Lauder. And diversity matters here as well, and that led to higher stock price. So companies need to satisfy the diverse needs of consumers with respect to workforce diversity in terms of gender, race, and such efforts will translate into the company's profitability and stock price as well as sustainability. So the same goes for us as well, but you have to invest in these companies too.
어떤 이익이나 이런 건 아닌 것처럼 보이긴 하지만
It
결국은
may not look like profit in the short term. However, it will determine the success or failure of the company, the culture of the company, the decision-making process of the company, so how they make decisions, how they reach consensus, how they reach conclusions are really important. But many people overlook such importance. I talked about female representation in senior management. So as you can see here, companies with at least one female director had generated a compound excess return per annum of 3.3% for investors over the previous decade, and companies where women made up at least 15% of senior managers had more than 50% higher profitability than those where female representation was less than 10%. So again, female representation matters. So as I said, we invest in these companies
코로나가 때문에
because of the pandemic. We had a difficult time deciding on which company will survive or not. But I think that we have to put the cart before the horse now. What I mean by that is that when you look at the companies that you decided to invest in, how will they be assessed in the future, in the post-pandemic? You need to look at that. So not obsessed with bio or something that is thriving now amidst the pandemic, but look beyond the pandemic. You have to look at the qualities of the management, the scalability of the companies. You have to look at the culture. So these are some of the key factors you need to take note of when investing. And will this company what impact will this company make going forward? Will it be positive or negative? Is another aspect. And another one is if the competitiveness of the company was dampened by COVID-19, then you can change your decisions. However, you should not be obsessed with what COVID-19 inflicted on the companies as of now, because that is not a good approach in investment. It's just like the past, but do not be swindled over what COVID-19 inflicted on the companies. And also, I'll give you a tip based on my investing experience. For about a minute. Most of the time, people fail with investment because they look at the reports that assess the performance of the companies. For instance, the aviation sector is doomed, or this sector will not be able to survive. But then you should look beyond the report. So whenever there is an unexpected turn of events which led to a downfall of a stock price, then let's say that the revenue of the company declined by 5%, the stock price will plunge by 20 or 30%. So the smart investors focus on the fundamentals of the company and will see that as an opportunity to invest. Because they need to look beyond what the market is reflecting as of now. So you have to look beyond the numbers. When there are bad prospects about a company, we dive more into that company to find out more about the potential of the company. If you have a solid investment basket, I believe that you will be able to succeed with your investment regardless of the presence of COVID-19 pandemic. So you have to look at it in the long term and look at the qualities of the management to succeed. Thank you very much for your time.
네, 요즘 투자 열풍이 불다
Thank you very much. A lot of people are interested in investments, so I'm sure you found his presentation very interesting. Thank you very much, Mr. Lee, for your wonderful presentation. Let's move on to the second lecture. Now for the second lecture, we have with us the CEO and partner of VIG Partners, Mr. Chulmin Lee. He's going to be discussing changes in valuation in the era of Grand TEM. VIG Partners was co-founded by Mr. Lee, and it started from the Vogo fund that was established in 2005. And in 2017, they sold Korea Burger King to Affinity Equity Partners, a Hong Kong-based PEF, and they were able to achieve IRR of 30%. So let's welcome Mr. Lee. Good morning, ladies and gentlemen. I'm very happy to be here. I am Chulmin Lee from VIG Partners. As was introduced, we started in 2005. We've been operating private funds, and I'm serving as CEO and partner. In my presentation, I may not be necessarily talking about retail investments in equity, but rather what we've been doing, because we are a buyout fund, and I'd like to offer you some larger and higher level perspectives on what's happening in terms of valuation. During the COVID-19, there were many changes in the valuation matrix. So this is something that I'm going to discuss today. But first of all, let me briefly introduce my company and also myself, because my company and what we do is not very widely known to the public. And then I'm going to be discussing macroeconomic changes. Mr. Lee, a prior speaker, is of course more expertised in this area, but I'm going to be talking about the macroeconomic situations as well. And then I'm going to be discussing the changing views on valuation of companies. And in consideration of these macroeconomic trends, you may be able to be successful in your investment. And a very good example is 3G Capital. This is an American fund founded by Brazilian Americans. As was briefly introduced, VIG Partners started with Vogo Fund in 2005, and we've been investing in more than 4 trillion won for the past decade. And we have professional investors in the company. We're mainly focused on mid-cap stocks, so their corporate value is about 500 billion. And we receive investment, and we invest in these companies. So after, let's say, 3 to 4 years or 7 to 8 years, we will sell the ownership to another. And this is basically a very typical buyout business. We are mainly focused on lifestyle, healthcare, finance, and consumer. So these are the kinds of industries you can easily understand. You can see the portfolio. As was mentioned, Burger King was a very well-known case. BC Card, Dongyang Life, High Parking. And more recently, we invested in Bonchon Chicken, which is a chicken franchise in the US and South Asia. And Fomdai, this is an online marketplace, so we invested in this brand as well. And Preed Life, we acquired Preed Life as well, which is a funeral service company. When you look at the private equity fund market, you can divide them by their investment strategy, which is the vertical axis, and the size of the investment on the horizontal axis. There are companies who purchase management rights, those who purchase or those who invest in business opportunities. And by size, you can find that there are some funds that are investing only in smaller caps, but for us, we mainly focus on mid-cap companies whose corporate value is somewhere between 200 to 500 billion won. And Affinity, MBK, KPR, Carlite, these are overseas or pan-Asia global funds. They are mainly situated in the right upper corner where they invest in mega cap companies. We have various LPs domestically and overseas, so including pension funds and banks and insurance companies. And more than half of the money in our portfolio and funds are from these insurance companies and family offices and funds of funds and other LPs. And among private equity funds in Korea, we would be maybe the only private equity fund with 50-50 share between domestic and overseas LPs. I majored in statistics undergrad, and I got an MBA. And then I worked as a consultant at Boston Consulting for 4 years, and mainly providing consulting for IT and telecommunications media companies in Korea. And for 1.5 years at Boston, I was involved in M&As, so that led me to a Vogo fund, and this is where I am right now. Now I'm going to be discussing macroeconomic changes in the post-pandemic era. Once again, I don't consider myself as an expert, but in order to discuss changes in the valuation, I have to discuss the macroeconomic situations. So I will be very brief in discussing these macroeconomic trends. As you may know very well, there is enormous liquidity provided in the market, and this is rather common sense these days. A lot of people understand how there has been such an increase in liquidity, and the U.S. government debt has been increasing dramatically, and there are many discussions on whether these would be rescheduled or restructured. And there are some people who come up with interesting ideas of issuing some special coins on behalf of the U.S. president. So this means that there's so much dollar in the market. So that's on the left-hand side, and on the right-hand side, you can understand that the share of the U.S. debt to its GDP is very high. It's almost high as World War II. And what we witness, not only in Korea but also globally, is that property prices are increasing. And in Korea, the government has been struggling to address these property price increases, and there are some people who are even saying that they will have to change their policies dramatically. So there is increase in liquidity, and I can say that liquidity will continue to increase, and this trend will continue for some time. But because of this abundant liquidity, corporate stock prices have been on the rise. And you can see that the Dow and S&P and NASDAQ indexes have reached peaks several times this year. So compared to the GDP, the portion of the market cap is very high. It's more than 300%. Is it really normal? Is it reasonable? So this is a big question. Then we need to understand what it means. There are many discussions on the implications of the increase in the market cap. Now, in the Korean stock market as well, there is a lot of liquidity in the market, and you can see an increasing number of IPOs. And as of September this year, about 16 trillion won has been publicly raised through IPOs. And in the past, it was mainly around 10 trillion won at the most, but usually it was 5 trillion or 6 trillion worth of IPO in the past. But now it's already more than 16 trillion won, and we have Kakao Pay waiting for the IPO. So I think there will be more IPOs happening in Korea. It's not only in Korea, but other countries as well. But the issue here is that a lot of the money are not investing in the growth stocks, but rather the value stocks, but rather growth stocks. Now, compared to the value stocks, you can see the stock price movements of the growth stocks, not only in China, but also in Korea and in the US. After the pandemic, these growth stocks have been gaining their prices a lot, and they are outperforming the value stocks. As a result, not only in the US and China, but also in Korea, when you look at the movements of the Kospi index, which was very surprising to me as well, when you make a comparison between 2001 and 2010 and 2021, you can see the top market cap stocks. And we have a lot of these top market cap companies. These are growth stocks, LG Chemicals and Celltrion, Kakao, Samsung SDI, of course, battery company, and Hyundai Motors was considered a value stock, but now considered a growth stock because of the EV and new vehicles. So of the top 10 market cap, high market cap stocks in the Kospi, these are not all based on growth stories, not necessarily on the value stories. So this is a very big change in the Korean stock market. Now, given these trends and these changes, we need to take a look at the changing perspectives on the valuation, especially after the outbreak of the pandemic. And you can think about a very dramatic example that I often mention as well in the media interviews. A very good example in point is Coupang, a very successful IPO of Coupang. And at a similar time, eBay Korea was sold. And as you may know very well, Coupang, the GMV, growth merchandising value, is about 20 trillion won last year, and eBay Korea had similar GMV. But as for accounting revenue, Coupang purchased these items and then they store them in their warehouses and they ship them out, so they have higher revenue on the books. And eBay Korea, even though they have auction and Gmarket, they do not purchase these items and keep them as assets, but rather they are working only as a platform and they get fees. So it's a different business model. Because of the business model difference, each year Coupang incurred a lot of losses, but on the other hand, eBay Korea was able to generate profit. But when you look at the value of the company, now we have about $30 per share for Coupang. So a total market cap is 60 trillion won for Coupang. So that's amazing. But for eBay, this was acquired by Shinsegae and the valuation was only 4 trillion won. So there's such a stark difference between Coupang and eBay. And you may wonder why. Because the biggest differences between Coupang and eBay would be the growth trend of GMV. At the end of 2020, of the entire GMV, the GMV may look similar, but Coupang started from nothing, and for the past 10 years, they were able to grow the GMV, but eBay Korea GMV growth rate was very slow, very low. So as a private equity company like myself, we would have to take a look at this. We have to look at their historical performance as well as the future potential. And for Coupang, they didn't really have profitable business, but they were able to create a large valuation. And this was successful in the US market and a very successful IPO. Of course, the total market cap came down from 100 trillion won to 60 trillion won, but already it is very successful. So you may wonder how this was possible. In basically all the players in Korea, including ourselves, venture capitals, and securities companies and banks, all these main players we're trying to understand the situation, how Coupang was able to succeed. And the concept here was, of course, TAM, a total addressable market. This was already an existent concept, but TAM or TAM refers to a total addressable market, and this refers to the entire value proposition that a company may be able to capture in the total sector. This really shows how big of a sector is as a total. So this is an interesting indicator that we need to take into account. And on top of TAM, you have SAM or SAM, and at the top we have SOM, Serviceable Obtainable Market, and SAM or SAM, Serviceable Addressable Market. So TAM is much more than SOM or SAM. This is a potential and how far this company can go in this particular sector. And let me give you an example. Let's say there is a cleaner. We have some cleaning franchise in Korea as well. And from their perspective, let's say they have 1,000 laundromats or 2,000 laundromats. And the entire laundry or cleaning market in Korea can be the total addressable market because they're operating only in Korea and they're doing laundry business only. So you can take a look at the entire laundry or cleaning market. That's the TAM for a particular franchise. And let's say that there's another company, a new player, and they're not only offering laundry services like in the traditional manner, but they will go and pick up the clothes and then clean them and return them. So you may think that it's pretty much the same business model, but then it offers more convenience because consumers do not have to physically visit the laundromat. So this may not be a significant difference at first. But let's say that the management and the investors, they have a different idea. They say that, wait a minute, we have these workforce, they visit these customers' homes on a regular basis to collect laundry, and then they return them, and then we can add something on top of this basic business. For instance, we can offer tailoring service or storage service, or we can maybe sell some daily necessities to these customers because they have the basic customer base. Then you can see that the TAM will increase dramatically. So if there's a company who is going beyond the existing business model to expand the size of TAM, then this has huge potential, and this leads to a difference in TAM. So when you think about the differences between Coupang and eBay Korea, I'm not trying to make it simple, and these are not the numbers officially announced, but when you think about 60 trillion won versus 4 trillion won, which is a very big difference, you may think that Coupang and eBay may serve the same market because in Korea the total market would be 160 trillion won, but the difference is, in order to expand its business, Coupang is able to go out to Taiwan and Japan and other Southeast Asian countries. They are going to do that. So potentially, they not only limit their business to Korea, but also other overseas markets. So that's number one potential. And secondly, as for online shopping, eBay does not purchase these items themselves, so they're just a platform, and therefore they are not really able to offer fresh produce services, fruits or vegetables, because they are perishable. But on the other hand, Coupang has Rocket Fresh service, which provides overnight delivery of fresh produce, vegetables and fruits. That is also included in its TAM. And as you know, Coupang has Coupang Eats. They deliver foods from restaurants, and they're competing with Yogiyo, and they are trying to be a number 2 in this market, and that's once again 50 trillion won. And the Coupang easy payment system is also a very promising business, and with one slide you can easily make a payment, and this solution can be provided to third-party companies, and this can also add more to the TAM. And as you may know, Coupang has something called Coupang Play. This is a OTT service for their Coupang customers. But as you may know very well, eBay, before acquired by Shinsegae, was just a subsidiary of American eBay. So it doesn't have much autonomy, it doesn't have much room for investment, so they were not able to expand to food services or fresh produce services. So I think this was why it was up for sale. And that is basically the determining factor between 60 trillion won of corporate value versus 6 trillion won of eBay. And Coupang was able to increase its TAM very successfully. So we need to understand the TAM potential of various companies. You can find similar examples. For instance, in the automobile sector, I don't have to go over this in detail because everyone pretty much knows. And the market cap is so the market cap is amazing for Tesla, and one share is more than $1,000. And compared to other traditional automobile companies, there's no point in making a comparison. When you think about the number of vehicles produced by Tesla versus the other traditional OEMs, it's so different. So there's no point in making a comparison. But when you think about market caps, there's a dramatic difference. And the only answer or explanation to account for this difference is the difference in TAM. Of course, Mercedes-Benz or other companies, they manufacture cars and they sell them. And then there is autonomous software and autonomous driving and other sensor solutions developed by Tesla. And they can offer these solutions to other companies. So we should not view Tesla as a traditional automobile OEM company. It's a completely different business model. And you can compare between Airbnb and Accor, the largest hotel chain in the world. Of course, not every company is valuated this way, but now we have to be able to view companies from a different perspective because valuation metrics are changing, and mainly it is because of the difference in TAM, or total addressable market. So now many Korean companies are trying to expand their TAM. Shinsegae is very active. They purchased eBay and they have also acquired W Concept. They try to expand their business scope so that they would no longer be just a retail company, but they want to expand and increase their total addressable market. Otherwise, eMart or Shinsegae have limited TAM, and they need to overcome this limitation. And there's very active investment, and they're selling properties, and they're also selling the headquarters building in Seongsu-dong. So they're trying to liquidate these properties to make investments in other areas. So that's the case of Shinsegae. Then what other examples can we find? You can take a look at specific companies or some global companies or some large corporate, large companies in Korea. But there is a very interesting example in the areas of private equity where they recognized the importance of TAM and they were able to make investments successfully. So this is an example of 3G Capital. Basically, 3G Capital started in Brazil. There were founders who worked at an investment company, and together with two other co-founders, they started this 3G Capital. They were working as investment advisors, and they were sort of tired of doing that, and they wanted to do something different. And Brazil was growing its economy, and they saw a lot of opportunities, and they wanted to make investments themselves. And they started in the 1990s, but then in the 2000s, their business became very active, and so it garnered a lot of attention. And the book written by the co-founders is titled Dream Big, and this was translated in Korean, but I do not recommend the translated version because, to be honest, the translation quality is not very good. So I like to recommend you to read the original English version, Dream Big. They are a private equity company, but they have a very different investment philosophy, and they set a very clear philosophy, and then they executed on this philosophy, and they had very successful investments. There is a playbook by 3G Capital. It was summarized in Economists, and it is also mentioned in the book. And what's interesting here is that when they make investment, of course they're buying companies, then they have to change the management. As John Lee mentioned, management is crucial. But the management was not doing well, and that is why they were not able to capture their TAM. Then who do we need to put in? They have these three standards: poor, smart, and deep desire. So PSD, those who are poor, smart, but have deep desire to get rich. So when they acquire a company, they will get rid of the management members that do not fit this criteria, and they will hire new managers. One good example is what I'm going to mention later, is that they purchased the US Burger King headquarters, and then in Asia, they readjusted the management of the global Burger King franchise. And we purchased Burger King Korea, and the global CEO is 31 years old from Harvard MBA. He had no CEO background before, and the Asia head of Burger King, who worked as internal counsel. So he had a law degree, but he became CEO in his 30s. And another CEO graduated from Harvard, and he worked for East Asia at Burger King, and then he became the next CEO. And now he is serving as the CEO of Restaurant Brands International. He's actually a European chairman, and he's only in his early 40s. And what they do to these management members is big, hairy, audacious goals. So this is big and hairy and audacious, very aggressive goals. So they get this new management and they sit down and they think about these very aggressive goals. And they will say, well, okay, this is Burger King. We should not stay there. We should not stop here. We should become a global #1. And we should be global #1, not only in the US and Europe and Asia. And let's say you want to be successful in Asia, and you have to really think about how to integrate all these different parts of Burger King. But there's so many opportunities there, because let's think about it. Beverage companies and restaurant companies, they are very old businesses and they have old mindset, but you are in your 30s, you're young, you're ambitious, you're smart, but you're poor. You want to make money, right? So you come and we will help you. And if there's anyone below you who's not happy about you serving as a CEO, then we will take care of that. And there may be no formality and no unnecessary expenses, and you just fly economy. I fly economy. So here, there is this culture of 3G Capital. They focus on simplistic approach. The management has to be simple, the operation has to be efficient. So these ideas were instilled in all the companies that they invested. So they would spread this culture. One good example is the Burger King in the US, and after they acquired the ownership, they got rid of all these charter flights, and senior managements older than 45 were all laid off. Of course, I'm not saying this is right, but it was a dramatic change, and all employees would have to fly economy. But then if you're successful in what you're doing, your performance is good, then you and your management and your employees will make a lot of money. So there is a clear goal and clear incentives. So that was the biggest success factor of 3G Capital. And it is also mentioned in Dream Big. You may wonder how this makes sense, but this book explains how it worked. There are three big success stories. First one is beer story. At first, they acquired Brahma, a Brazil beer company, two small breweries, and then they created a company called Brahma in 1989. And with that, they purchased Interbrew, which is a European company, and they changed the name to InBev. And then later on, as you may know, Anheuser-Busch, that has a lot of American beer brands, was acquired. And then they turned it into AB InBev. And most recently, they acquired SAB Miller. So as of today, they have about 30% market share globally. And in this process, they didn't have much money. So they purchased OB beer in Korea, and then to get more money for additional M&As, they sold OB beer to Affinity. And then after a couple of years, they bought back the OB beer because they were able to pay higher. And so they have equity stake in these companies. So they had confidence in the beer story, and they were quite aggressive. When you think about the beer market globally, it is very inefficient. And when I was involved in this market, they would say that, oh, there's logistics issues and cold chain storage issues, and there's so much demand, but supply is in short. So they saw these opportunities and they made aggressive investments. And moving on to the second story, QSR, quick service restaurant, they recognized that the publicly listed Burger King was not in a good shape. And so they purchased it and they delisted Burger King from the stock market. And in Korea, Burger King was operated by Doosan Group, but then they paid for that to get that. So we also were able to benefit from this story, and we were able to get a successful exit. And moving on, based on this experience, they purchased Tim Horton, which is a very popular and successful coffee franchise in Canada. And then they combined them and turned it into RBI, Restaurant Brands International. And in 2017, they acquired Popeyes. So now, in terms of size, they're number 3 in the world. Number 1 is McDonald's, number 2 is Starbucks, and they're number 3. And the final story is catch-up story. As they were operating Burger King, they saw that there was so much demand for ketchup. So together with Berkshire Hathaway, they got equity of Heinz, and then they later acquired Kraft. Now they became the largest food suppliers in the world. So when you take a look at these 3G success stories, 3G Capital had very clear philosophy ideas, investment philosophy, and they hired young management, and then they offer very clear incentives. And the key here was all about TAM. This was the underlying concept behind their success. So this is an insight that we gained, and I just wanted to share with you. And with that, I'd like to wrap up. Thank you very much.
Yes, thank you very much, Mr. Lee Chulmin, who talked about their era of the great time, changing perspectives on corporate values. Thank you very much for the insightful lecture. Now, moving on to the next lecture. Professor Kyung-Min of the Department of Environmental Planning at Seoul National University will present about liquidity and future of real estate market. Professor Kim received his PhD in urban planning and real estate from Harvard University. He currently serves as the chairman of the Social Innovation Council of the Ministry of Interior and Safety. Now let's welcome Mr. Kim up to the stage. Good morning, everyone. As introduced, my name is Kyung-Min. So, as you said, I work at the Department of Environmental Planning at SNU, and I teach environmental planning. And allow me to give you my background first. I was a software engineer in Silicon Valley, and then I received a PhD on office marketing in urban planning and real estate from Harvard University. And then I also worked in a company, and I was in charge of forecasting. That's back when I worked in property and portfolio research, and I also serve as an advisor to the Social Innovation Council of the Ministry of Interior and Safety. And I just wanted to give you my bio because I just wanted to tell you that I know a thing or two about the real estate market. As you know, in 2020, the pandemic broke out, and that had a huge impact on the real estate market, as you know. The European cities went to lockdowns, and people were reluctant to dine outside. And because of that, the retail side was hit the hardest. So we divide the real estate market into 4 categories. First, the residential. Number 2, office buildings where we work. Number 3, retail, the commercial buildings. And number 4 is industry. And the industry category has subcategories, warehouses as well as logistics. And out of these 4, the retail commercial market was hit the hardest, and then followed by the office market. Because people worked from home as they did not want to meet face-to-face, and the office market was hit hard as well. And up to early last year, many people lost their jobs, which led to decreased revenue and income. So the residential market was also hit. So the industry market, the industrial property is what I'm talking about right here. I apologize. I would like to move on to the next slide. However, starting mid last year, things started to change. Because of the unprecedented low interest rate, we saw immense liquidity in the market, which heated up the real estate market. So as you can see from the articles here, as for London and NYC, Manhattan's real estate prices were sluggish, but they started to reach record high after picking up, and the same goes for London. And the same went for Korea as well. The residential market picked up in Korea, but when it comes to early last year and up to second quarter, the market was sluggish. However, starting Q3 of last year, the benchmark rate was declined to about 1, which was unprecedented, and that drove the market up. And I also look at the outcome of high liquidity. And of course, real estate prices soared. But I think that we need to look at these 2 factors. Inflation that was caused by high inflation, and then how to curb inflation. The central banks wants to pull up the base rates. So I would like to look at the 2 aspects, inflation and the long-term interest rate of the bond. So depending on which has yields more force in the market, the real estate market is bound to change. But when it comes to inflation, it has a positive impact on the real estate market. And we have seen this trend for the past few decades. And we saw this from real estate research and studies. Especially the steel price out of the commodity prices went up last year, which means that the new buildings will see increased price. So they too go hand in hand. One goes up, the other will go up as well. So when we have high inflation, that can actually have a great impact on the real estate market. Now this is the global trend of the real estate market. We can see the housing price trend and how much it is heating up. You can see the history from 1910 to today, and it compares year on year and gives you the average. And it also compares that of first quarter of 2021 year on year. So you can see that the trend is quite positive. This is the OECD average, which is about 8%. However, if you look at the historic mean, it was about 4.23%. So the average increase of OECD of first quarter was about double that of the average, the historical average. And the same went for the US as well, because they recorded high increase. So this is the first quarter of 2021, and you can compare that with that of Korea. So it was 12.9 against 6% in Korea. But we need to do more research for the second quarter in June, and that increase, I said that OECD was about 8%, but it is likely to go up to 10%. It has gone up to 10%. And while the increase in the US is up to 17.5%, so it's unprecedented. And here we can look at three trends here. As I said, the price went up very much. The OECD average is the average of all the countries, and the 17% of the US means that one country, one single country, saw an increase to 70%. But a country has metropolitan cities as well as small cities. And for metropolitan cities, we will see higher demand, which means that those metropolitan cities drove this increase. And this is the second trend. So x-axis is the historical trend, and y-axis stands for that specific quarter and the increase of that specific quarter. And we see that those who saw increase historically also saw an increase of that specific quarter, so they went together. They had a high positive correlation. And as I was preparing for the presentation, I was surprised to see this, because this graph is year-on-year increase of the housing price trends, so compared to last year. And in the second quarter, it was 17%. But then, compared to the past, it's unprecedented, as I mentioned. And compared to that of before 2021, it was in the 1990s, which stood at 14.5%. So this hype that we are seeing, the hike that we are seeing in the real estate market in MIC is unprecedented. And the blue line here is the nominal value, but the real that reflects inflation is the yellow, the orange line. And there are a lot of people concerned about whether this is a bubble or not. However, I personally think that this is no bubble. And now this is the correlation between inflation and price. And the higher the inflation is in countries, then the price will go up as well. Now this is the commercial market. And as I said, commercial includes retail, office, as well as industrial, including the logistics warehouse. And if you look at the three, then the trend that you see here is offline retail. It's not online, it's offline. And offline commercial real estate, the portion went down. So back in 2010, the retail was a good investment type for the investors. It accounted for 23% back then. However, offline retail account for only 11%. And that's because, you know, the offline retail market is losing competitiveness against online retail. And this is the second trend. With the rise of online retail, that means that the demand for industrial warehouse will go up. And we actually see that in the trend. And also the industrial sites will receive more investment. It doubled from 10 to 20%. And the office share went down slightly. And as I mentioned, we see residential picking up a little bit. And now this is the commercial real estate trend, the price index. As for retail, last year, of course, we had Corona. However, this wasn't hit by the Corona. It was actually, it underwent change from the mid-2020s, even before that, because you see that the retail market was undergoing a paradigm shift from the mid-2010s. And other lines, as you can see for office and retail, they drop, but the yellow line goes up, which is the industrial real estate, including the logistics warehouse. Now this is the transaction volumes by property type. Back in 2020, the transaction declined for most of the types. This is in comparison to 2019. And the slides that I share today mostly show the global real estate trends. You see that hotels and retails experienced dropped transaction volumes. This is 2021 first quarter. And compared to the previous slide, you see that the decline rate is smaller than the previous one. However, when it comes to the industrial sites and the land transaction, those two increased, went up. Now, as I said, I'm repeating myself, but the commercial real estate is picking up and is seeing much demand. And on the left, you see the composite yields by major property types. So it's the total of all the rent money. So you compare that to the price. So what I mean by that is you have the denominator and denominator, and you will make a calculation between the two. Now the red is industrial properties. And compared to the past, the industrial property, the yield was higher than the past, which means that the price was a little bit lower than other types. But as for office and retail, if you compare against these two, now the industrial type picked up and they're on par, which means that with higher demand for properties, the property prices went up. Now this is the same data, but if you look at what it says on the left for the industrial side, you see that investment is being drawn to industrial sites. Now, I talked about the industrial property type globally, but now here I would like to talk about the impact of inflation on housing price and impact of interest rate on housing price. So because inflation and interest rates can have a huge impact on the housing prices. I would like to look at those two. This is not confined to Korea. The same goes for the US as well as other global markets. LIT stands for long-term interest rate. This is the interest rates, in short. And the higher the base rates are, then more people would like to invest in real estate. The sentiment goes up because real estate are risky assets. So the yield must be higher than the bonds, the national treasury bonds. So that means that for 10-year treasury bonds, they go together. Well, that means that for the real estate, the yield must go up. And as I said, because at the denominator it has the price, this will mean at the end of the day that the price will drop. So the research says that with the rise of benchmark rates, then the yield of the real estate will go up. That means that the price itself will go down. And in the long term, this is inevitable. And the Bank of Korea actually increased the benchmark rate from 0.5 to 0.7, and the market shows two trends, two patterns. First, less transaction volumes. However, with more reporting prices, the index itself went up. Then how are we going to analyze this trend? Well, I think that from my perspective, those who join this real estate market, what they do is they make the decision of today based on what happened yesterday in the past. So if there was a hiking trend over the past few years, then what they will do is the pattern will persist for a foreseeable future despite the hike of the benchmark rates, because people will still transact based on what happened in the past. However, at one point, this will drop. So this is the housing price versus LIT. This is, for instance, Canada. Rising interest rates will be #1 issue for Canada's housing market. And on the right, you see about the UK, the end of the housing boom with the mortgage rates rise. And they keep releasing articles about the correlation between housing price and LIT. Now, this is Seoul's housing price against base rate of the Bank of Korea. If you look at the yellow line, that's the Gangnam area apartment prices, and the blue one is in Seoul. So as you can see here, as for Gangnam, it moves faster than Seoul in terms of trend. So it is a trend-setting city. However, be it Gangnam or Seoul, based on how much they are affected by benchmark rates, the apartment prices change rapidly. If you look at the benchmark, which is in orange, during the 2008 financial crisis, BOK dropped it from 5.25 to 2% in just 6 months. And at that time, apartments in Gangnam dropped in their price by 20%. And then, with the movement of 3 to 5 BPS downwards, the price of Gangnam apartments went back. It recovered. And back in 2010, from June, the Bank of Korea started to increase its interest rate. And for 1 year, it increased that to 200 BPS to 302 BPS. And during that period, if you look at the housing market, the real estate trend, the price dropped by about 7% on average. But from July of 2012, the benchmark rates increased, which pulled up the housing market prices as well. Now we're looking at the benchmark rate trend in Korea, but we have to look at it in the context of the US as well. So if you look at the left graph, the blue line is Korea, the orange line is the US. And if you compare the two, then in a short period of time, other than 20 months, Korea's benchmark rate was always higher than that of the US, on average about 120 BPS. And that makes sense because we make investment and the risk premium should be reflected in the base rate. Because otherwise, if our benchmark rates go hand in hand with the US, then it is more likely that investors will turn outward. But here the slide shows the Fed FOMC's September data, and I was surprised to see this. 8 out of 18 said that in 2024, the benchmark rates is okay. So FOMC's participants' assessments of monetary policy, whether it is appropriate or not. And with the tapering kicking in and the rise of interest rate, then we will see a change going forward. Korea and the US, the base rate gap was reversed, which means that the US pulled it up faster than Korea. I believe that the Bank of Korea will increase it in July and in December, and I think that they want to stay aligned with that of the US. Now I'd like to talk about the housing market trend. And as I said, I used to be a software engineer, so I looked at the data to make some analysis, and this is from MOLIT, the Land and Transportation Ministry of Korea, that released this data. And they release all the actual price of Seoul's housing every year, and you can read the trend. And this is for Seoul. The real estate price now is totally different from that of the past. For example, if you look at the slide, it's the Seoul apartment transaction volumes of apartments over 1 billion Korean won, because they're considered high-end apartments. So the top 10% of all the transaction volume considered as high-end, which means that these people, the people who want to reside in these apartments, will not be able to borrow money from the banks. And now the rate, if you look at here, was 15% out of the total market. But this means that against the global standard, 1 billion was not considered high-end. But compared to about 5 years ago, it was about 2%. So the market changed dramatically. And for Gangnam-gu, with apartments over 3 billion Korean won, you can see this trend. So apartments over 3 billion won, they account for 20% of all transaction volumes. So this means that 3 billion apartments are not high-end apartments in Gangnam. However, about 4 to 5 years ago in Korea, they only accounted for 2 to 3% of the total transaction volume. This means that the market trend changed, the dynamics changed in the market. And next, this is concerning in terms of urban planning, because we see the end of affordable housing for the underserved people. Now we have these different slots for mortgage, for instance, below 9 billion, 0.9 billion and so forth. And now if you look at the Seoul market, the affordable housing accounted for over 90% in the past. However, now that rate dropped to below 40%. And this affordable housing they exist in lump in no one grew. And few years back, housings below 0.6 billion was about 97% of the total market. However, as of the third quarter, that level was actually it no longer exists. So we can see that the housing price really hiked in Korea. Now, how are these crises connected to other factors? Well, I believe that liquidity was really the driving factor. And also, there is the Three Data Act. This is the trend of the two-year lease housing market. And it shows the increased rate year on year, quarter on quarter. So what you see here, you see the increase, which dramatically increased quarter to quarter. And the two-year lease market as well as the purchase market are completely different. Those who participate in the real estate market, they decide on the tenure, so whether they want to buy rental or whether they want to purchase the housing itself. Now, I believe that the two-year lease market is stagnant. And that trend, we could see that before 2018 or 2019. So the purchasing market was stagnant and the two-year lease market went up. However, when the purchasing price started to decline, we saw a stagnancy of the two-year lease market. However, recently, the two lines are picking up together, and this is new. And this graph is also, the slope is quite rapid. So be it the two-year lease or the purchase of the apartments, that can impact other assets. For instance, the multiplex housing, and the fluctuation rate was small in the past. It was within 5% in terms of growth rate. However, now it's over 10%. So as I said, the market dynamics have changed, which led to this outcome. I will skip this part. And the next trend is this, about the new apartments and the premiums for the new apartments. So as of a specific period, you see this trend for the past 5 years. So you compare the old and new buildings and see the price difference between the two. And as for Seoul, the premium difference was about 20%. However, recently, that spread increased to 40%. So personally, I think that with higher income level of the people now want to give, they're willing to give higher premium for new apartments. This is my last slide. And as I said in the beginning, I talked about what was happening in the US. And we have this forecast model of different analysis. So we use different models to make a prediction. For instance, the demand and the supply and the yield and so forth. And we use different equations for this. Let's say that the interest rate goes up to 1.5%. Then the prices in Seoul, the prices of apartments in Seoul will go up 10 to 17% when everything else stays the same. So this rate, the benchmark rate increase is something that we need to be concerned about. Thank you very much.
네, 김경민 교수님.
Thank you very much, Professor Kim Kyung-Min, for his very informative presentation. It was very insightful and helpful. Thank you very much once again. And now we're going to have a panel discussion with the expert panel members. So I'm going to invite the three presenters on the stage for panel discussion. And before we begin the panel discussion, let me show you a very short video.
네, 그럼 패널 토의에 앞서
Yes. Before we begin the panel discussion session, I would like to make an announcement of the event. You can also enter the photo event we are hosting with a chance to win gift coupons. DM us a photo of yourself watching the forum and you will be eligible to win a prize, and see the event details on the YouTube channel. I believe we are all set to go. Let us invite Professor Kim Duol of Economics and Myongji University, who will moderate the panel discussion session. You can take the floor.
안녕하세요.
Good morning, everyone. My name is Kim Duol, professor at Myongji University, who will moderate the session. Thank you very much, keynote speaker, Professor Guillén, and the three lecturers for your wonderful presentations. We have hopes for a post-pandemic era, and we want to put COVID behind us, and I believe that will bring much changes to our economy and will change the investment landscape, and it is inspiring us to look forward. In that context, based on what the presenters mentioned, I would like to ask a few questions and hear their comments. First off, the first word that comes up to my mind and our mind is uncertainty, because the world is changing. So how will the future unfold? We have questions about that. And investment is all about the future, which is why I believe many people have questions about the future. And when you putt on a golf course, instead of looking at the hole, you have to look at some point slightly behind the hole. And I think the same goes for us as well. So I have a question for all three speakers. We are undergoing change, and we have to invest, of course, in the long term, 5 to 10 years ahead. However, at the same time, we also need to understand the short-term prospects and make quick judgment. So when it comes to asset management, how long do you think we should look ahead? What would be the optimal years to look ahead to make investment? That's my first question to all the three speakers. First, Mr. Lee, John Lee. Yes. So with respect to your question, my answer is this. Yes, the world is changing rapidly, and we are seeing unexpected changes. Well, COVID was unexpected, but still, the investment duration or period, whether we should shorten or lengthen, I do not agree to that idea, because the purpose of investment is this. Well, I have been investing in stocks for a long time, and I believe that predicting the future is pointless. It's all about distribution of your assets. So the reason why you invest in stocks is to be well off after you retire. You be financially well off. And given that, what would be the share of the stocks out of your total assets? If I'm in my 20s, I think 70 to 80% should be the share. And as we age, well, the share of the stocks will go down. It works that way. It's not about a specific time period, whether you should shorten or you should expand the period. However, now in Korea, the share of stocks in the total asset portfolio is too small. So it is too minuscule that it is pointless to discuss whether we should invest in the long term or short term and so forth. So now this is what the future holds. We are moving online, and longevity is increasing. So that means that when it comes to healthcare or platform businesses or online shopping, these categories and industries will make money. So you invest in those companies and add them in your portfolio. At the same time, you have to prepare for after retirement, and what should be the share of the stock should be something that you need to ponder. Yes, so you said it's not about the duration or term, it's about the essence of asset distribution. Yes, thank you very much for that. Now, Mr. Lee Chulmin.
I have a different perspective because we are an institutional investor and we do a buyout investment. So including ourselves, I think that most private equity companies have different perspectives. And I mentioned that our time frame for investment is between 3 to 5 years, and you have to take a look at changes happening in the industry as well as in the company. But at the same time, after, let's say, 3 to 5 years or 6 years after we sell this company, the one that buys the ownership of this company will have to be able to be profitable, right? So I think it is more of a long-term horizon. We take a look at the company from a longer perspective, more than 10 years. In the 1940s and 50s, after the Second World War, private equity fund concept was formulated and institutional investors have emerged. And since then, I think basically we have the same approach. I agree with John Lee that we cannot predict the future, but based on the past historical data and our own experiences, we can use data to understand what may happen in the future. This pandemic was not something that we predicted, and it has had significant impact on the global market. However, when it comes to what can happen in the 5-10 years down the road, we cannot make a prediction. So as an investor, we have to have a long-term perspective, even though it is not easy to predict the future. And we also have to be mindful that there may be unprecedented or unpredictable factors. But at the same time, you can base your judgment based on the historical data and the past trends so that you can have a better understanding of what may happen in the future. So I think overall perspective is the same. Thank you very much. And so Chulmin Lee, you mentioned about the time frame of more than 10 years. So by 2030, which companies will prosper and thrive? So that's the target timeline that you have in mind as you make investments. What about Professor Kim? You made a presentation on the real estate market and you discussed what could happen in the next 2 to 3 years based on your findings, your analysis. So what is your view on this? Now, from the property market perspective, the biggest weakness, of course, in the real estate market is the aspect of liquidity. When you make investment in real estate, it's not very liquid. Just because you need money, you cannot sell real estate right away the next day. So it's very different from stock market investment. So I think you have to definitely look at the benchmark rate trend. But nevertheless, within the real estate market, there are many opportunities available. There are risks involved in the real estate market, and there's this liquidity issue. And to overcome the liquidity issue, you can invest in REITs. And so you can examine your perspective on REITs as well. And secondly, we are seeing the emergence of the platform economy, but then this economy is changing rapidly, and there's enormous expansion of the total addressable market, and we have interesting approaches taking place. Now moving on to e-commerce. Even though the pandemic ends, this whole e-commerce market will not disappear, but it will continue. So for retail logistics or warehouse properties, these have great potential. Now, we also have to think about the potential industrial transformation of various industries. As for warehousing, there is a company called Prologis, which is a logistics company in the US, and you have to take a look at their warehouse inventory, but they only account for 5% of the entire warehouse inventory. This means that there's very low level of institutionalization in the logistics industry. There's an increasing demand, but when it comes to the supply side, when you take a look at these logistics companies, they have short history and they have low level of expertise. So this may offer potentials. And for real estate, you have to take a look at the benchmark rate movement, but at the same time, you have to see business models and characteristics of various industries before you make a decision.
Yes. So Professor Kim, you talked about the context of the real estate market, the commercial or be it residential. So depending on the different types of the real estate, the time horizon, time frame should be different. So relating to that, I would like to pose the second question to all three speakers. So Mr. Chulmin and Mr. Chulmin, you talked about how this moment is an opportune moment that we are in the face of great opportunities. And whereas you two talked about the opportunities, Professor Kyung-Min, well, other than the commercial type real estate, you said that when it comes to the residential housing, the price will fluctuate and be adjusted. Now, let's dive into that. So in the next 1 to 3 years, what should be our portfolio? So the real estate to stock, what should be the share between these different elements? Then, Professor Kim?
Well, it may be my personal trait. I am a risk averter, so I have low risk appetite. And the real estate market is quite cyclical. So this is something that we have to take into account. And as I mentioned before, from my perspective, when the benchmark rate increases, then the expected return will increase on the real estate property, so prices will be adjusted. But I don't invest in stocks, but based on what they said, I wonder whether stock prices will continue to increase. As an academic, I may have a different idea. But from the real estate perspective, this is something that we need to take a look at. Let's say there's an entire portfolio, and in the entire portfolio, the portion of real estate exposure may be small, but let's say that there are fluctuations of prices in the other segments, then let's say that the exposure of real estate may increase in the portfolio as a result of price adjustments in the other asset classes. And so there may be a lot of sales of real estate properties in the US. This may lead to price adjustment in the real estate market. So price changes in the other asset classes may have impact on the price adjustments of real estate properties. And at the same time, there are many new opportunities. Let's say Landmark and Partners. These are secondary market players. And their return or rate of return is really high. So I'm not sure about the future situation yet, but within a particular industry, you need to look at different positions and you need to study the market, right? So in the housing market, prices may be adjusted, but within this housing market, there may be new opportunities arising in the mix. Now, Mr. Chulmin Lee, what do you think about this? It is a very difficult question. I think it is a matter of who is making this investment. So whether this is a retail investor or a corporate investor, a pension or insurance company, so it depends on where you're coming from and which background. But all in all these different types of investors will first take a look at the money that they have, and they will consider how to allocate their money in different asset classes. In North America and Europe, there are very successful pension funds, CPPIB, and especially in Canada, they have very successful pension funds. Their total asset size is really big. So you need to learn what they're doing. And when you take a look at their asset allocation strategies, you can see that they have lower exposure to bonds and equity, and they have higher exposure to real estate, and alternative investment share is increasing, including PEs and venture capital. So there is an increasing exposure to alternative investments, and at the same time, they're looking for new opportunities regarding cryptocurrencies and these coins. So I think you have to take a look at what they're doing, overseas pension funds. And similarly, in Korea, you can see some of these trends that investors are following globally. Now, when it comes to individual investors, they would, of course, have to diversify their portfolio, as John Lee mentioned. But within that, how much weight adjustment they're going to make. They cannot make direct investments easily, including some of the issues on losses for private funds or other funds. So instead of making direct investment, individuals can utilize ETFs. And by investing in ETFs, they can be exposed to various trends domestically and globally. And utilizing ETFs may be a good idea to diversify your investment. And ultimately, the ETS allocations may be similar to the asset allocation strategies of global pension funds in order to follow the global trends. Now, as for companies, they may invest in some financial products or real estate properties, but these may not be what the shareholders want. Then, these companies and their shareholders, they want to invest in new growth opportunities. And I believe that's why many large Korean companies, some of them are actively investing in new growth business models, and they are serving as something similar to Western pension funds that bring about higher rate of return. So once again, you may reduce the share of safe assets or safe investments and increase exposure to riskier assets, regardless of which type of investor you are, whether you're a retail investor or an institutional investor. And I think the same goes for private equities and venture capitalists as well.
Yes, thank you very much for that insight. You talked about the uncertainties. Well, given the uncertainties in the market, we have to look at the opportunities and take risk in investment, and that's how we should approach building our portfolio. That's what institutional organizations are doing, investors are doing, and also something that the individuals should consider. Yes, Mr. Lee, John Lee. Yes, so when making investment, people often make this mistake. So they want to predict the next 2 years. 10 years is too far away, and they believe that they can predict what will happen in the next 2 years. Many YouTubers or many stock so-called experts say that because of the uncertainty in the market, you need to wait, and then you need to cash what you have for now and invest later on when uncertainties subside. However, I believe that that approach is wrong because we cannot predict now how the stock price will change. I'm sure that you remember about 1 to 3 years ago when COVID-19 first hit, the bond as well as stock prices plunged. And at the time, many people thought, oh, we will see an economic crisis soon. So we need to sell off our risky assets. And some funds, of course, because of the redemption, you had no other choice but to sell those funds. But at the end of the day, I believe that many people learned a lesson from the COVID-19 pandemic. And then the real estate market as well as the stock market increased. So it is nearly impossible. It is impossible to guess the right timing when it comes to the market. And people tend to confuse speculation with investment. Speculation is about guessing something that you cannot know. It's like going to a casino to bet money. But then, whether we will see a tapering soon, now what's happening in the interest rate, you write your own scenarios, but that's pointless. You cannot time the market. And you talked about the long-term investment. 20 years from now, 30 years down the road, I want to be wealthy. And that's why you invest in stocks. But then, be it 1 to 2 years, people want to speculate. They want to guess. And retail investors, they trade a lot. And institutional investors trade 10 times less than retail investors. And the reason why retail investors fail is because not because they guess wrong timing or they bought the wrong stocks. It's because they guessed the right timing, and that makes it just too difficult for them. It ties their hands. You keep watching whether your stocks, went up or down on a daily basis, and that's not investment. That's speculation. It's near speculation. So at the end of the day, what I want to say here is, regardless of the uncertainty or certainty in the market, well, I believe that terminology itself is wrong because investing and stock investing entails uncertainty. Because nobody can guess whether your stock prices will go up today or not. And people say that we live in the age of uncertainties, but that's not true. It's just highly volatile. But some people look at the economic indicators and they say, oh, we need to cash this, or we need to have less or more cash, and decide in the short term that's not a good strategy. Yes, thank you. So Mr. John Lee and Mr. Lee Chulmin, you share many ideas, you agree on many points, but to make it fun, I would like to ask a question where you might have different opinions. So, when you presented, Mr. Lee Chulmin, you talked about the idea of total addressable market, TAM, how the conditions of the market change, and we need to focus on that to make better investment. Whereas Mr. Lee Chulmin talked about that concept, Mr. John Lee talked about the qualities of the management and also the corporate culture, the values that the companies pursue. You said that we need to focus on that. Of course, the two matters, both of them. However, since we live in the age of the pandemic and the economic landscape changes rapidly, where should we focus more to make better investment? Can I please hear from Mr. John Lee first? Yes. Well, I don't think that we will disagree because as Mr. Lee Chulmin said, for instance, the management needs to be able to change the corporate culture, which will lead to more values. But now, the value of that has increased even more than in the past because we see new opportunities being created even as we speak. It can be called as TAM, the total addressable market, or we can use different terminologies to describe that. And it really depends on the skills of the management to make full leverage of the conditions, how to increase the market value or how to generate value. And now we rely even more on the management in that sense, because before selling products was good enough. However, that's no longer the case. We need to create values. And we say unmet needs in English. What seemed impossible in the past now became possible, enabled by technology, especially when you look at healthcare. Before, when you had a car accident and you couldn't use, you're paralyzed, then you couldn't do anything. But now we have robots, assisting robots, which create new opportunities for those people with disability. So it really depends on the level of knowledge or skills or strategies that the management has. And when I look at Tesla, I think of this. Well, Elon Musk has never created a single car, but now their market value is 1,200 trillion. And that has become possible. Why would people invest in Tesla that can barely produce 1 million cars a day? Because they trust the management. They trust in the words of Elon Musk, and they believe that Musk will deliver his promise. So I think that we will agree. So we also invest in, well, of course, we may differ because they invest in private equity.
I think I have a similar view. Let's say there's a company with a very huge TAM and the management is excellent, then you definitely have to invest in this company, whether you are a retail investor or an institutional investor. But identifying such companies is not easy. One good example is Tesla or Facebook. Of course, Facebook is now struggling, but it's been doing well. And Google, they have excellent management, and Apple as well. And that's why Apple has #1 market cap in the world. And recently, including Tim Cook and other senior management, they have excellent capabilities. So if you are able to identify such companies, you can invest in them. This is a wonderful thing, but it's not easy. Let's say there's company A and company B. You can make a comparison between Coupang and eBay. You may think that they have the same TAM, but there's definite difference. And between eBay and Coupang, how is the management different between these two companies? It is all about the decision makers. In eBay, the board members will make a decision for eBay, for Korea, but Coupang has this chairman, Kim Bum-seok, and he may have certain vision or ideas, and the investors and board members will support that, and these will be translated into specific decisions and actions. So you need to take a look at that. And in addition to that, it's not only a few members of the management, but also it's all about the system, whether there's this corporate culture where employees are encouraged to take advantage of the TAM or expand the TAM. And also it is about shareholders' mindset, whether these shareholders are committed to supporting the management so that the TAM can expand. So these are the kinds of things we need to consider. And that is why Elon Musk and Tesla has been successful, because people put trust in Elon Musk and autonomous driving and innovation in the automobile sector. And that is why the shareholders have remained shareholders. So like the same for us, we do a buyout and then we give a lot of incentives to the new management. And I would say that you don't have to worry about other people. And in a traditional corporate culture, you have to think about your bosses and you have to think about your performance evaluation, but don't think about that anymore. In this company, you are the management and you don't have to care about other people's views, because we are the shareholder, we are the private equity fund, we are the shareholders who would support you no matter what. So with that kind of a commitment, the management with the right set of skills and capabilities can expand the TAM. So for instance, there was this company who was purchased by a private equity, and there was a very fundamental difference in the business structure that may lead to a higher TAM, and this may lead to different results. So let me give you an example.
So you talked about market cap, be it Taco Bank or other companies. Compared to other banks, their market cap is immensely different. However, the previous banks make so much more money. Then why does the market not recognize such value? Because of the lack of innovation or creativity of the management. Because they see that they cannot trust the future of the company. So that means that going forward, the management team needs to be creative. It needs to build a strong corporate culture and stay transparent because that will determine the share price. Yes, thank you very much for that. Now I have a question to Professor Kyung-Min. So a few years back, Edward Glaser wrote a book about a city, why people want to reside in cities and why does real estate price in cities keep soaring. And Professor Edward Glaser talked about Survival City and wrote a book titled Survival City. And in his book, he talks about the shock of the COVID-19 pandemic, which will actually bring differences in the types of cities. Some cities will adapt well to the changes, others will not. And that was his prediction. Now, if you look at from Korea's perspective, we see regional disparity problems in Korea, which is widening. Will the pandemic accelerate that trend, or will it bring a new wave of shock?
Thank you for the question. I can say a lot of things about this. When you compare before and after pandemic, before the pandemic, since the mid-2010s, the offline retail industry's been struggling. It's same in Korea and also in the US. And now with the platform industries increasing, there will be an increasing demand for warehouse properties. And these trends have been accelerated by COVID-19. But then let's say that we have to do everything online and people may move out of cities. That was one of the speculations. But when you look at the history of cities, that's not necessarily true. Last year, we had the global pandemic, but that was not the first in our history because there were 6 big waves of cholera pandemics. And especially for the third pandemic in London, more than 20 people died in London. That was 1850. And last year, the pandemic was very serious in London, but the number of deaths is not even 30,000. So in the 19th century, London struggled because of the cholera pandemic, but London as a city continued to grow. So when you take a look at these papers written by Professor Edward, you can see that there is a benefit of concentration of cities. So cities may not change dramatically, but we have to take a look at the different sectors and areas. In Yeouido Island, in financial institutions, face-to-face interactions are really important. And so financial institutions will want to be closer together, so they will stay in Yeouido. But for online retailers, they don't have to have face-to-face communication. So many companies are spread out, and in IT sectors, we have Gangnam or Pangyo, where a lot of IT companies are concentrated. So when I imagine future cities will continue to be very valuable, but within a city, there may be some adjustment among various areas within the city, and it's not going to lead to the collapse of the cities.
Lastly, so let us widen our perspective to the Korean Peninsula, from the Korean Peninsula to the global landscape. So during the keynote speech, Professor Guillén talked about the future, and the future lies in Africa. Given the population trend and other factors, he talked about the importance of Africa. And recently, many investors in Korea are started to invest globally. And not only in China and the US, but also, I guess, I think for now, they're investing in China and the US only, but be it the stock market or the real estate market, how do you foresee the future in terms of investment of the Korean investors? Well, what Professor Guillén said, he talked about the demographics, the birth of many babies, and in Europe and Asia, and compared to that, Africa will see tremendous growth potential. That was his message, and I agree with Professor Guillén. And in the long term, I think we can look at two aspects: the stock market investment and direct investment. So first, stock market investment, the size is small, so I do not see much investment happening there. However, for the corporate funds and so forth, well, those with small scale but with large opportunities, I believe that it will yield higher return. And there was this emerging market fund before in the past, and that's about dozens of years ago. And the fund manager invested in Africa a lot. And the yield rate topped other yield rates. However, that didn't last long. So in terms of direct investment, now the young people, they want to make money. And if they do want to make money, then I believe that they will have a tremendous opportunity to make money. However, when it comes to portfolio investment about stocks, we will have to see.
I'm not sure if I am the right person to answer this question, but basically, as I mentioned before, in Africa, there are more babies being born. Yes, that's a global trend, and it's going to have some implications on the global economy. But as an investor, I may have a different idea. There are so many unpredictable factors that may have impact on my investment. And in Africa, there are many risks, including geopolitical risks. So for domestic institutional investors and companies, they may not be able to benefit from investing in Africa right now. So on the other hand, what we can do is that Korean investors may continue to expand their presence in the European market and in the US market. As individual investors, you may put your money in ETFs and other opportunities. And for the past years, there have been a lot of M&As in the Asian market, and also there's increasing investment in Europe and in the US. And I think it is actually time for us to be more active in the advanced markets, because many Korean companies are doing well. And if we capitalize on these potentials, I think we can benefit from these investments. And for Africa, these are very risky capitals. And venture capitalists or growth capitalists and private equity funds, when they have a lot of risk appetite, they may go to Africa and make investments, but not so much for other regular institutional investors. And I think I agree with what he said. The average growth rate, GDP growth rate of Africa is 3.5, so 3.7, so that's slightly higher than the global growth rate. But in the developing economies, the growth rate is more than 4%, so that already shows performance. And then there are political, social, and economic risks in Africa. But as Professor Guillén mentioned, in addition to population growth, urbanization rate is something we need to look at. In Africa, the urbanization rate is only 40%, but by 2050, it's going to be 60%. So it means that there will be so much population increase in the cities, and there will be younger people working in the cities. And so for Core Plus office, in some cities, they're doing really well. But for smart homes, there will be an increasing penetration, and online retail and e-commerce will expand in Africa. And there will be a demand, increasing demand for warehouse properties and some tech companies. But nevertheless, still, there are many other types of risks in Africa, so you may observe and study the Africa before you make any decision. Thank you very much.
Yes, thank you very much for your presentations and your insightful feedback. So to wrap up, maybe you can give us your concluding remarks before we wrap up the forum. Mr. John Lee? Yes. So a larger number of people are now investing in stock, and they have an increase in accounts. We see an increase in accounts. And when it's new for people, they feel lost. They do not know how they should invest in stocks. But I think that they should look at tax first, because there are tax benefits, for instance, retirement benefit as well as pension benefits of each country. And you need to look at those first because it is essential. However, not many people understand the importance of that. And they want to invest by themselves. You know, for instance, they would buy in Samsung securities and they keep transacting. And it's better off not to transact at all or not to buy stocks at all rather than doing that. So look at the stock and be consistent. And you have to really ignore the short-term changes.
In the long run, when you look at the Korean capital market, we only had banks, but after the foreign currency crisis, we had foreign PEs and securities companies, and large companies were engaged in the financial market. And then recently, now we have more private equity funds, and they're actively involved in the M&As. So the private equity market has grown, and it has become a center of the capital market in Korea. But I think this era is declining. It excludes stock market investments by retail investors. Now, where is it shifting to? Shifting to big tech companies and pension funds that are supporting these big tech companies. There are many big tech companies that are making huge investments, and their investments will have an impact in the stock market, and successful IPOs keep coming up. So as a private equity, we're interested in that. And a lot of global private equity companies are investing in big tech companies and IT companies. And I think this trend will continue for some time. From the perspective of institutional investors, the share or the importance of private equity will decline, and interest and investment in big techs will continue to grow. And this means that whether it is an IPO or an organic growth of companies, these may have an impact in the stock market, and this is something you need to watch out for. I'd like to make 2 points. In the real estate market, it is quite different from the stock markets. And in the stock markets, growth stocks are important and the TAM are important. In the real estate market, it is basically the value of all the rentals or rents that you combine for a particular piece of property. And in the real estate market, you can make some predictions. GE Capital in-house lab was the beginning of our company, and we take a look at the Goldman Sachs report and Canada's pension funds investments. So we take a look at these strategies and reports before we formulate our investment strategies. I may have wrong predictions, but I'm concerned about high inflation. The US inflation rate is 5%. In Korea, it's 2.5%, and we have some fluctuation, but still inflation is very high. So to tackle this, I'm sure that benchmark rates will be raised, and this will have an impact in the real estate market. But if inflation is definitely higher than the benchmark rate, this is once again a very risky situation because real estate markets will be severely affected. Right now, we have to take a look at the macroeconomic trends. Thank you.
Yes, thank you very much for the wonderful presentations and for the discussions. Thank you very much. We will now wrap up the panel discussion session. Thank you.
네, 앞으로의 글로벌
That now brings an end to today's forum. We have higher hopes for the future, and thank you very much for the insightful feedback and discussions. Thank you very much, Professor Kim Duol, for moderating the session, and thank you very much, discussants, for your participation. With that, we will now wrap up today's forum. The theme of the Global Economy Investment Forum 2021 was Crisis Can Be Turned into Opportunity in the Age of COVID Economics. Please participate in the survey on Chosunbiz event website after the event to win gift coupons. And please check the survey link on YouTube. Thank you very much for staying with us throughout the forum. This has been 추혜정. Thank you.